Vodafone Idea slides over 5% as the company looks to raise up to 18,000 crore rupees via an FPO. The FPO will open on the 18th of April and close on the 22nd. The floor price has been set at 10 rupees a share and the minimum bid lot is 1,298 equity shares.
Laurus Labs dips nearly 2.5% after brokerage firm Goldman Sachs initiates a sell call on the stock and sets the target price at 350 rupees, citing unfavorable risk-reward. The brokerage initiates coverage on Newland Laboratories with a buy call, target price of 9,100 rupees. The stock climbs more than 5%.
Entero Healthcare is locked in a 20% upper circuit after brokerage firm Jefferies initiates coverage on the stock with a buy rating and a price target of 1,510 rupees, citing that the company would benefit from industry consolidation. The firm adds that the company should see a 20% organic revenue CAGR over FY24 to 26.
Credit Access Grameen 2 jumps close to 5% after brokerage firm Goldman Sachs initiates coverage on the stock with a buy rating target price of 1,788 rupees a share. They say that the company demonstrated a good track record through the cycles. Goldman Sachs also forecasts a healthy 21% profit CAGR over the next 2 years.
And Bharti Hexacom makes a strong debut on the exchanges, listing at a 32% premium at 755 rupees a share compared to its IPO price of 570. The stock is up 41% as we speak, which was higher than JM Financial's target.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me is Hormuz today. Hormuz, well, good morning. Welcome to the show. It's an interesting morning. We had some, muddled global cues. The market's down 95 to around 100 points. Pretty much par for the course.
And 95 to 100 points is also considered a bit surprising considering we are not used to having these kind of drips these days. But yeah, it's par for the course, right? Or since the lows that we made on March the 20th, which was 21,710, since then the index is up over 1,000 points. And so there is a bit of cooling off, as we can see, due to some adverse global cues. There's slight recovery from the lowest point of the day, which was around 22,625. And since then it's up around 30 points. The Nifty Bank also is among the top losers, is down over 300 points as we speak. 49,000 managed to cross those levels on Wednesday, hasn't managed to do that today. 300 points lower there, 48,700 for the Nifty Bank as well. The broader markets though are showing a bit of resilience there. The Midcap index has turned positive. The small cap index is also trading with healthy gains. The midcap index now 0.25% higher, now above 5,500 as we speak. And the small cap index also is now doing very well. It was up 0.5% in early morning trade and it is building on those gains. There you can see another 0.3% higher. There is the small cap index as well. Couple of stocks that I wanted to highlight though is Vodafone Idea is the first one as we highlighted, but the markets are not doing well, but market related stocks are doing very well for themselves. CDSL is one of them. CDSL is the top gainer on the small cap index, is up over 5% this morning. And CAMS is the other one, CAMS, and that is because of the payments aggregator license that it won for itself. So good going for both CAMS. There you can see 4% higher is CAMS, and CDSL also is the top gainer, up over 5% this morning as we speak. So 1982 on CDSL, almost 2,000 now. So par for the course. The market's not doing well, but plenty of movers in the broader markets.
Well, plenty of movers. Just take a look at Newland Laboratories. The stock is up more than 3-4 times in the last few years. The stock is now up close to around 6%. So big move out there. Transformers and rectifiers continues to chug along. The numbers look good. They upped their guidance as well. So that's up close to around 5%. It's in that circuit band. Hariom Pipes is now moving up. That's moving up on rather good volumes as well. So keep an eye out on that one. And KEI Industries as well. It's been a big winner. Well, that one in fact is up close to around 5%. So plenty of action actually from the broader markets. Let's get in Manas Jaiswal though to tell us how do you trade the index. Hi Manas, good morning and good to see you win. When Hormuz and me were just discussing that the markets are down 100 points, that's the Nifty, but broader markets plenty of action. But on the headline index first, let's discuss. What do? Do you look to buy into this 100-point dip, or do you think that maybe in fact we could pull back a couple of 100 points more and then you would want to get in?
Good morning, Nigel. See, I would like to go long in Nifty because I think the main trend is quite positive. Nifty is still making higher tops and higher bottoms. Nifty is still trading above 10 and 20-day moving average. And I believe that till Nifty is trading above 22,500, I think the trend will remain positive. So on this correction, one can create long position. Stop loss should be around 22,500. And I think there's a consolidation, and after some consolidation, you can see a level of around 22,950. So I'm quite positive on Nifty, and I believe that from current levels, Nifty can give around 300 points rally. So take a long position, but keep the strict stop loss below 22,500.
The strict stop loss below 22,500. Manas is highlighting 20 to 950. He didn't say 23,000. That seems to be a bit of a resistance on the upside, isn't it, Manas? But what about the Nifty Bank as well? Yeah. Does it have enough legs to get to 50,000 by next week, and couple that with your stock recommendations as well this morning?
See, this is a clear-cut breakout on Bank Nifty, what we have seen just, I think, last week only. So this is a consolidation. The trend is quite positive. And if you have to set a target for Bank Nifty for next, I think, 3-4 trading sessions, I think your target would be around 49,700, 49,800. So even at current levels, I think one can create long position in Bank Nifty also. Your stop loss should be around 48,200. Stock specific, I would like to go with two stocks. Both are long recommendations. First is Lal PathLab, where stock has broken its 200-day moving average. It is trading above 100-day moving average also. We have seen significant higher volumes. So I think one can create long position in Lal PathLab. Stop loss should be around 23.25. Target would be around 2,500. So this is a positional trade. Second is the buy call on IRCTC, where we have seen a flag pattern breakout. Now you can see the levels are of around 1095. So for the target of around 1095, take a long position here also. Stop loss should be around 1029 in IRCTC.
All right. Thanks a lot, Manas, for joining in and giving us the view on the index as well as the stocks that we discussed. Wishing you a good Friday's trading session ahead. But it's time to go to our special segment then, where we get you a few ideas for profit from Money Control Pro. Neha Dave of moneycontrol.com joins us to talk about a stock that she's tracking closely. Neha, take it away.
Today's stock idea is Protean eGov Technologies. Protean is a unique play on the rising digital adoption in the country. The company is pioneer in e-governance solutions and in building digital public infrastructure. Currently, Protean's top line is contributed by three business lines, that is tech services, NPS, that is National Pension System, and identity services like online PAN verification, e-KYC transactions, etc. Moreover, Protean is technology service provider that powers the network on which ONDC ecosystem is sitting. The company has diversified into new verticals like open digital ecosystem, in account aggregation business, and cloud and infosec services. The future growth of the company can come from taking the tech stack internationally and going into developing countries. The company is likely to play a significant role in creating open digital ecosystem in the sectors like health, education, and agriculture. It is worth noting that while Protean works closely with the government in establishing the DPI, only 12% of its revenue comes from the government. A multi-year population scale project provides revenue visibility. Moreover, Protean's business model is asset light, it has a high operating leverage, and the company has a track record of healthy profitability and cash generation. In terms of valuation, the company is currently trading at around 34 times earnings estimated for FY25. Valuation is premium but is justified by Protean's dominant market position in establishing DPI and by the growing tailwinds of digital penetration in the country.
Protean eGov Technologies, we highlighted this in great detail on Friday after the block deal that took place in the stock with 361 funds. Those were among the sellers there. But let's take a short break here on Chartbusters. Up next, we get you more on the markets and all the buzzing stocks in today's trading session. Stay tuned. We'll be right back. Back with us on Chartbusters, and pull up Entero Healthcare. That is the stock that we highlighted in our headlines as well. The stock is up 20% in an upper circuit now after Jefferies initiated coverage on the stock with a buy recommendation. Price target of 1,510 rupees. That's a 50% upside from Wednesday's closing levels. But despite this 20% upper circuit, the stock is still below its IPO price, which was 1,258. So the stock had made a low of 970 on the 28th of March, and since then it was consolidating a bit, and then comes this 20% up move in today's trading session. What is also doing well though is Quess Corp, and that is the top gainer on the Nifty 500 index as we speak. The stock was up 7.5%. And that's slightly off the highest point of the day now, Quess Corp, but still 6% higher at 612. So good going there for Quess Corp as well. The other one though, Sun Pharma, the top loser on the Nifty in today's trading session after the US FDA issued the observations, the OAI status to the Dadra facility. 1550 now on Sun Pharma, 3.5% lower. But the other pharma stock that is surging in today's trading session is Metropolis, and that is following its fourth quarter business update. Ekta is joining us to tell us more. Ekta, what does Metropolis highlight in its business update?
Well, yes, they have mentioned that there was a 10% revenue growth. This is despite a holiday season and, long weekends which have come up in March. Their core business revenue, which is basically X of COVID as well as PPP contracts, has risen up 15% this quarter, which is driven by a volume growth of nearly 8% and a revenue per patient growth of around 7% year on year. Now, their B2C revenue, which is business to consumer revenue, which is basically the retail part of their portfolio, has also risen in double digits. The company has indicated that competition intensity has eased over the past 6 to 12 months. So that would be a positive on the whole. And the margins are higher due to an increase in volume and price this time. And the company has now also become debt-free. So overall, on all of the parameters, they seem to be firing. And hence, you can see that the stock is higher because the street is now expecting a good set of numbers. And I think that's rubbed off on the likes of Dr. Lal's as well, because that would give you a sense in terms of what to expect on a whole for these diagnostic companies.
Okay, all right, Ekta, thanks a lot for that. That stock is up close to 5%. By the way, let's pull up a few more stocks on the broader markets. Puravankara, just pull up the intraday chart out there. That stock is bursting away actually as we speak. It's now up close to 9%. And majority of that move has come in this hour. So that stock is moved up. A couple of other notable movers in trade. We have, let's pull them up. Ramco Systems. Well, that stock was up 20% on Wednesday. It's following up with another big move. Datamatics is another one that's moved quite well. So quite a few of these stocks, they're in a world of their own. Irrespective of what the index is doing, they are having their own party. For the time being, I'll tell you what. Let's slip into a short break. You come back. We'll focus on the other big movers. Don't go anywhere. Welcome back. Well, let's focus on the new kid on the block, Bharti Hexacom. Well, it made a strong debut on the exchanges. It listed at a whopping 30+% premium. Rima joins us to fill us in with a quick analysis on that. Rima.
Thanks so much for that. Well, this new kid on the block wants to be number one. So he wants to be the top student, at least today. It's a very strong listing. The stock opened with a gain of 32% at 755 rupees, much higher than the issue price of 570. The subscription too for the IPO was fairly strong at nearly 30 times. Now, quick word about the company. Now, this is a telecom service provider company, but it largely operates only in two circles, Rajasthan and Northeast. About 78% of its revenues comes in from Rajasthan. In Rajasthan, it's the number 2 player. In Northeast, it's the number 1 player with a market share of more than 50%. The promoters hold 85% stake in the company, which includes Bharti Airtel at 70%, and the second is a government-owned entity called TCIL, Telecommunication Consultants India, and they have a 15% stake in the company. About the financials, last year, the company ended with a top line of about 6,500 crore. Margins for the company have practically doubled. FY21 margins were at 24%, and in 9 months, FY24 margins have gone up to 49.3%, and that's driven by a sharp increase in ARPUs. ARPUs for Bharti Hexacom are touching their 200 rupee mark, 197. Now, JM Financial has initiated coverage in the stock. They've put a target price at 790, but the stock is not too far away from that. Their key thesis is that ARPUs will continue to compound at 10%. Currently, ARPUs are at 197. According to JM Financial, it could hit 285, so closer to 300 rupees by FY28. The two circles they operate in, Rajasthan and Northeast, they are under-penetrated in terms of their tele-density, or they have fewer high ARPU kind of subscribers. And therefore, according to them, Bharti Hexacom's margins will go up. Currently, it's at 49.5%. They see it going up to 57% by FY30, far away, but there is a margin expansion scope possible, and the compounding in the EBITDA is also going to be fairly strong, and it could even be higher than its peer, Bharti Airtel. Back to you.
You know, that's the kind of report you want to put out, right? You initiate coverage, project a 40% upside, the stock goes up 40% the next day, you pack your bags and go home. That's done for it, right? Bharti Hexacom, 800 now already, 790 was JM Financial's price target, 40% higher as we speak. So a very strong listing, the first one of FY25. But stay on, Rima, because Vodafone Idea is also the stock in focus. The board has approved a fundraise via an FPO of around 18,000 crores. Tell us more on that.
Yes, so the board has approved a follow-on public offering of aggregating up to 18,000 crore rupees. They've also come out with the price. So the floor price for the FPO is at 10 rupees and the cap is set at 11 rupees per share. Now the stock is under pressure because the FPO price is at a discount to the current market price. 2, the market was expecting this 18,000 crore of a fundraise. And 3, it will entail a large dilution. 18,000 crore of fundraise compares with its market capitalization of about 60,000 crore rupees. But bear in mind, that said, that the FPO price is going to be lower than the price at which the promoters are committing money into the company. Last week, the promoters committed that they will infuse, the Aditya Birla Group, that they will infuse 2,075 crore rupees, but that price is higher at 14 rupees 87 paise. And also bear in mind that this fundraise is, happening after a very long time. Finally, clearly, the company has the confidence that this FPO is going to go through. They will be able to raise that money. With it, they will be able to kickstart their 5G rollout. So that is a positive, but I guess, it's been expected. The price is at a discount and it's a large issue entailing a large dilution. The company has also gone on to say that they will participate in roadshows. They will interact with investors and analysts starting 15th of April till the closing of the offer. Back to you.
Okay, thanks a lot for that, Rima. Well, India and Mauritius, they have moved to amend the double taxation avoidance agreement, potentially opening up millions of dollars worth of foreign investment coming into India from Mauritius for renewed tax scrutiny. Surbi, well, she's been on top of that. She's joining us to decode the potential impact on the foreign investments. Surbi, please educate us.
Well, this is a bit of a Mauritius FPI ghost coming back from the past, and the market will only hope that it's not going to become a very big issue this time around. Now, let me tell you what's really happened. This is the second time that the India-Mauritius double taxation avoidance agreement has been amended. The latest amendment inserts in this treaty what is called a Principal Purpose Test, or PPT. Now, this PPT is not a new phenomena that suddenly India has thought of. This is actually part of a global tax framework, the OECD framework. A lot of bilateral treaties are now incorporating this Principal Purpose Test in it, and the India-Mauritius Treaty will do the same. So, therefore, we're in sync with the global practice. So then what's the problem? The problem is that the Principal Purpose Test is used to determine whether any particular structure is created and set up, or any transaction is facilitated through a jurisdiction only to take advantage of the tax treaty, or whether it has some other legitimate reason for being there, for that transaction to come through that country. So now with the PPT being inserted in the India-Mauritius Treaty, effectively, the tax department can question a lot of the transactions that have happened, the inflows that have come in from Mauritius, both FDI inflows and FPI inflows. This is where things start getting a little convoluted. Now, let me take you further back in history. We're talking about the second amendment that's happened now. The first amendment to this tax treaty happened in 2016. That is when India had completely tightened the screws on any abuse or any evasion of capital gains tax by amending the treaty and by grandfathering all the old investments, all the investments that were made, FPI investments, FDI investments, up till 31st of March 2017. And then all the investments that have been coming into India after the 1st of April 2017, all of them are subject to capital gains tax as per Indian tax laws. Now, what this amendment is doing is it's raising the question on whether there will be retrospective applicability. Will the Indian Tax Department now go back and reopen all of those cases prior to 2017 and start asking why wasn't tax paid as per Indian tax laws? That is the huge question that the tax world and the investing world is right now grappling with. The wording seems a little confusing, so people really hope that there'll be some clarity on this from the Revenue Department. Till then, things are on tenterhooks. But I'd just like to add some final context as I sign out. How important is Mauritius a destination in terms of getting in FDI and FPI inflows? Now, historically, Mauritius was huge. It was, the bulk of the money was coming in from Mauritius. But ever since we had the 2016 amendment, Mauritius's place has actually come down. And other jurisdictions like Singapore have really picked up. In fact, the FPI flows that are coming in the Indian capital markets, that's debt and equity put together, from Singapore, that number has trebled compared to FY17 to the latest numbers available, which is FY23. So Mauritius is still very important, but how important, and if the retrospective applicability happens, then could this really be a big shakeup? That is what the big question is on right now.
All right, Surbhi, thanks for that. In fact, earlier today, we spoke to Mr. Dinesh Kanabar, the Chief Executive Officer at Dhruva Advisors, regarding this India-Mauritius treaty. Let's listen in to what he had to say.
All past investments, whenever made, even if earlier grandfather, could now be regarded as covered by the new amendment. And therefore, any assessments happening, maybe even reopening of the past assessments, could be potentially possible under the amendment. And that is where the whole Pandora's box opens up. It is therefore necessary that this amendment to the treaty, which is consistent with the global framework and which ought to be there. So I have no challenges with why the amendment is happening and whether it is consistent with global principles or not. But it should be made applicable prospectively and not for the past years. And unfortunately, the amendment itself is really so worded that it could give itself interpretation that it applies to past years whenever investments are made and whenever they are disposed of. It doesn't matter. The tax authorities could come after you. It is potentially possible that the tax authorities could go after such divestments which have been made in the last couple of years, which will come up for scrutiny now, and say that please demonstrate to us that you are satisfying the principal purpose test. And even though you may have been earlier grandfathered, that grandfathering we will not apply to you because you are now supposed to satisfy principal purpose test. This may relate to any earlier year, but that's what the treaty says.
As we wrap on this edition of Chartbusters, we have an announcement to share with you all. We are launching CNBC-TV18's first live personal finance webinar, the CNBC-TV18 Accelerate Personal Finance Handbook with Sonia Shinoy, where she'll be joined with 3 well-known experts on Saturday, the 11th of May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax savings, managing your portfolio, retirement planning. There's lots to learn and lots to do. Whether you're in your 20s, 30s, or even in your 40s, this live webinar is for you. We have limited seats, so don't miss this chance. Register now. Scan the QR code to register or log on to cnbc-tv18.com and we'll see you on the 11th of May. But from Nigel, myself and the team that put this show together, thank you so much for watching. Trading Hour comes up next.